And welcome to Fund to Money. Here we will be discussing Riskometer, mutual fund Riskometer. As the name suggests, a Riskometer gives you an idea of the risk in a mutual fund scheme. Why do you need to know about it? The reason is this: that if you are focusing on returns, you need to know the risk you are taking to get those returns. Fund managers who invest your money in a mutual fund, they're taking certain risks. It is regardless of where they're investing, whether it's debt, equity, or any other asset class or a mix, they are taking up risk, and you need to know about the risk which is helping you get a return. And before you invest, you need to know about it so that you're making the right choice. Because if it's a short-term requirement, you may not want to take a very high risk. If it's a long-term requirement, you might not want to take a very high risk. You might want a moderate risk, or you might still want to take a high risk, but you still need to know about what are the dangers, what are the risks that are there on the way, so that when you actually face the risks, you don't panic and take wrong decisions, take decisions in a hurry. And it's very important for investors, simply because they tend to focus on returns and forget about the risks, and which actually, when they encounter the risk, they typically face a problem. Also, you need to know about the risk, because as we just mentioned, that there might be requirements for which you may not want to take a certain level of risk, or you might be comfortable taking a certain level of risk. So we'll be discussing about Riskometer. It's basically a visual depiction. It tells you about the risk. It's almost like a car dial in a car dashboard with a needle, right? So on the left hand side, it's almost in a semicircular form. You'll find this Riskometer in every ad, mutual fund ad of a scheme, or a scheme related documents. You'll find Riskometer out there. It's a visual depiction. So it's like a car dial in a car dashboard. Left hand side has got and it's semicircular, and on the left hand side is low risk, and as the dial keeps moving in a clockwise direction, the risk keeps increasing. And on the right hand side, at the extreme, is the highest risk. So this is what a Riskometer is about. It's supposed to be there, mandatorily has to be there in any product literature that an investor is supposed to go through, is available to an investor, and therefore it's your duty to take a very good look at Riskometer. Riskometer tells you quite a few things. What are those things? We'll be telling you about them. We'll give you the details, but that's coming up in just a little while. Welcome back. Welcome to Fund to Money. We are discussing Riskometer, mutual fund Riskometer. Every scheme has got a Riskometer, as we have told you. It's a dial in a car dashboard, where left hand side has got the lowest risk, and there's a needle, and it keeps pointing to a risk level, and right hand on the right hand extreme, on the right hand side, is the highest level. So currently the Riskometer obviously has gone through changes over a period of time. We won't be discussing its evolution, but right now there are 6 levels. So there is low, then the next higher risk is low to moderate, then there is moderate, then moderately high, then there is high, and then there is very high. So these are the 6 levels. Now you need to see on which level this scheme is falling. And naturally, if it's a short-term requirement, we will be looking at low to moderate, right? And for longer-term requirements, where you can handle the ups and downs of the market, you can look at high to very high. Now, a very important point here is this: that even debt schemes can be very high or high, depending on the investments. Now, before, what used to happen was a scheme category would be depicted in Riskometer. So if it's an equity fund, then you'll always look at high risk. But as experience has told us, even debt schemes can be very risky, and so therefore it had to reflect the portfolio. the investment mix of the scheme is what is now being depicted by the riskometer. That's why it's so very important for you, because it's giving a very accurate understanding of what the risk is. Now, along with these categories are also scores. They are numbers, right? So they are numbers which are being given in terms of on each category. So for low, it is less than 1. For low to moderate, it is somewhere, it's more than 1 but less than 2. These are numbers that are being given, to each category. For moderate, it is more than 2 but less than 3. For moderately high, it's more than 3 but less than 4. And for high, it is more than 4 or less than 5, and for very high it's more than 5. So it's not all that complicated. You can get a number. You'll see for each slot there is a number. Each category, risk category, there's a number. Now, how do you get these numbers? There are obviously, what do you need to know? You need to know in which category your scheme is coming, whether it's debt, equity, whatever it is, in which category these schemes are coming, and you'll get a number. So therefore, if it's more than 5, it's obviously high risk. It should be featuring somewhere on the right hand side. The dial, the needle should be pointing to the extreme, right? So this is how you figure out. So in the 6, it's almost like 6 buckets, or 6 buckets in which they have been divided, and each one of these categories has got a number assigned to it. How do you get these numbers? So for equity, there are certain things that have equity investment, certain things have to be kept in mind by the fund managers. For debt investments, they have to calculate the risk again, and they have to tell you for debt schemes, liquidity risk, how quickly you can sell the securities and give the money to investors is a very important parameter. There's credit risk, the risk of debt in securities that have been bought, where the people who have raised the security, they are defaulting. That is an important factor. Interest rate fluctuation is a factor, but liquidity risk has been given the highest importance, right? In terms of equity, there is volatility, there is market capitalization, and there is impact cost, which is basically if you sell a scheme or one particular large transaction happens, what is the ease with which money can be given to investors. This is important for scheme investments or stocks with lower float. So similarly, the weights etc. have been determined for gold and real estate. So this is actually should give you some kind of an idea of the kind of risk evaluation that has to be shared with you as an investor, and that is there in the riskometer. So it's not some random diagram that's being put in the product literature. There's a lot of, it's become very important. And when you're looking at the returns, whether you're viewing a YouTube channel or any other place or a website, please make sure that you are getting to take a very good look at the riskometer, because that will tell you the risks, and the parameters that we talked of are the important parameters. Now, unlike in the past where it was a category, and if it was a equity, it was always high risk. Now, depending on the portfolio, because it's the portfolio which is getting reflected by the riskometer. The portfolio changes, if the risk level of the portfolio changes, the riskometer will also change. So the mutual fund is having to disclose it. So every month it is supposed to disclose it, and therefore when you're actually reviewing your investment performance, say every 6 months or so, it's very important for you to take it apart from the returns that you're checking out, say annually or 6 months or whatever. Make sure that you're checking out the riskometer, whether that any change has happened in the risk level. If significant change is happening, you're duty bound. The mutual funds are duty bound to inform you about this change. So remember, if major changes are happening in the risk level, you're supposed to be informed, and then you can take a decision whether you want to stick onto that investment or not. And it is not unusual for you for investors to find something like that happening in the days to come, because if fund managers make those moves, you're supposed to be informed. So you can clearly see how one small depiction, one small diagram, or one visual is actually far more important than what you might think, and it tells you a lot about where you're about to invest. So please take the riskometer very seriously, because it's going to help you and add that as an information source along with other things that we have discussed, like a scheme information document before you invest and when you're reviewing your investment. We hope you found this useful. If you've liked it, hit the like button, share it with others, and get connected with us on all leading social media networks. Subscribe to our channel. Till the next presentation, take very good care of yourself, and goodbye.